Remember GameStop? GameStop was the king of all meme stocks. It started a retail investor movement that we have really never seen before in our lifetimes. What if I told you GameStop might be back for round two? And this time, it involves Bitcoin. And I know what you're thinking. GameStop, Bitcoin, meme stocks. Even if this isn't your cup of tea, the ramifications of what might happen this year could be extremely impactful for all financial markets, whether you're invested in these particular instruments or not. So today we're going to break it down. We're going to talk about this mysterious photo that went viral on X. We're going to do a quick recap of the GameStop saga so you understand the dynamics that were at play back in 2021. Then we're going to talk about the other CEO in that photo, Michael Saylor of MicroStrategy, and we're going to bring it all together around what this photo could signify and how this could make waves, not just for GameStop, not just for Bitcoin, but for financial markets altogether. So without further ado, let's dive in. What's up, everyone? This is Brandon from Wealth Potion, where we make financial education easy, fun, and approachable by using video game analogies. And what better video game scenario than to talk about GameStop? Perhaps every gamer in the world knows about GameStop, whether it was because of the meme stock craze that happened in 2021, or just because you grew up as a kid going to GameStop, buying games, trading in your old games. It was a cultural phenomenon for a lot of gamers. And in 2020, it became much more than that. You might think that the meme stock craze that happened in 2021 was just completely random and arbitrary. But it was not. There's actually a backstory to why GameStop was the stock that went crazy in 2021 and became a symbol of retail investor frustration with financial markets. We actually have to go back to 2019, which was close to a year before GameStop ever made news headlines. And we have to introduce an interesting character that goes by Roaring Kitty, or Deep Frickin' Value on YouTube. He was by all measures a regular retail investor. He was a Reddit poster, had some YouTube videos, and he had an interesting hypothesis about GameStop. He noticed that there were more shares short of GameStop than there were shares that existed. We're not going to get into all of the financial mechanisms at play here, but it's important to understand the basics. When you short a stock, you are betting for that stock's price to go down. You're basically betting that the business is going to fail. And GameStop is a brick and mortar video game business that was severely hampered by COVID lockdowns all throughout the world. So hedge funds and large financial institutions were shorting the GameStop stock in size, with such size that they were shorting more than there were shares outstanding. And while you might be thinking, how is this possible? The reason for this has to do with some of the arcane mechanisms on which shares are actually created and destroyed. When you short a stock, there's not necessarily an equal share on the other side of that trade that is giving you their stock to share. They're somewhat synthetic. And so this retail investor noticed this interesting phenomenon, that there were more people shorting stocks of GameStop than there were shares existed. And this is what's called short interest. You can actually see in the title of this video that Roaring Kitty posted back in July 2020, so 6 months before the GameStop stock blew up, he pointed out that there was 100% short interest. Fast forward to January 2021, and his hypothesis really started to pick up steam, and we all know what happened. Reddit picked up the story, and the stock blew up in what many suspect was a very real short squeeze. A short squeeze occurs when the price of a stock goes up and there's a bunch of people shorting that stock. Because what a short means is that someone has sold the share without owning it first. Therefore, that person will have to buy the share at a higher price in order to get the share that they already sold. I know it's a bit confusing, but basically, as the price goes up, the people that shorted the stock start to get scared, so they end up buying the stock, which drives the price of the stock even higher, and it creates this effect that we call a squeeze or a short squeeze. And this happened in spades with GameStop. It went from around $20 per share to over $400, almost $500 per share, and it created a massive news event that reached all around the world. And that's probably where you heard about GameStop, and it was called this meme stock. Now, here's the interesting thing, is that it wasn't completely arbitrary. Yes, GameStop was by all means a very bad business, especially during lockdowns, but it became a cultural movement for retail investors because all those arcane mechanisms that I described earlier, retail investors started to get really frustrated because the short squeeze ended up getting halted many times as the price was rocketing, basically in an effort to bail out these large hedge funds that had been shorting the stock. And even though these hedge funds, it's been calculated that they lost close to $5 billion in that trade, many retail investors believe they should have lost a lot more, but it was stopped from happening by the financial system. Now, again, I'm not going to go into all of that detail, but just to show you how powerful of a movement GameStop started, there is a community on Reddit to this day that has over 1 million active members in it that all discuss GameStop and all of the ramifications. They basically believe that GameStop had and still has the potential to completely unwind the financial system if things had been allowed to play out as they should have. So again, it's become this icon for retail investors as a protest against the existing financial system. Does any of this sound familiar? Because it should, and we're going to come back to that. But first, let's switch gears and talk about the other person in this photo. And maybe it's a good time to actually talk about what this photo is and why we're talking about it. Recently, Ryan Cohen, who is the current CEO of GameStop, posted this photo with no caption on his X profile, and the internet kind of went crazy. It has gone viral, it's being discussed on Reddit and on X and on YouTube. That is because of the other person that is being pictured here. This is Michael Saylor, CEO of MicroStrategy. MicroStrategy is a publicly traded software business that, like GameStop, was not doing very well during the COVID lockdowns and pandemic for completely different reasons, but we're not going to get into that. They're a software business, they're struggling, and Michael Saylor realizes that the writing is on the wall. Important to note also that Michael Saylor was the founder of MicroStrategy, and MicroStrategy has been his baby and his business for over 30 years. So he does not want to see MicroStrategy fail, but it's failing. And he has all of this cash on his balance sheet. So what does he do? He ends up buying Bitcoin and holding Bitcoin on his company's balance sheet. Over the past few years, MicroStrategy has accumulated a massive amount of Bitcoin. MicroStrategy currently holds more than 2% of the total supply of Bitcoin on its balance sheet. And when you look at a ranking of publicly traded companies that hold Bitcoin, most of the other companies on this list are Bitcoin mining companies, which means that they have to hold Bitcoin as part of their operations. The next company down the list that is not a Bitcoin mining company is Tesla, and MicroStrategy owns 40 times more Bitcoin than Tesla. So needless to say, MicroStrategy is far in the lead in terms of a company that owns Bitcoin and has it on its balance sheet. But why is this important? Again, MicroStrategy was a completely failing business, but by putting Bitcoin on its balance sheet, it completely transformed the company from a struggling software business to a Bitcoin holding company, for lack of a better term. This is obviously very much reliant on Michael Saylor's trust and confidence in Bitcoin as an asset. But regardless, once we accept that Michael Saylor is a Bitcoiner, what he has done here with his business is truly revolutionary. He took what was a zombie company, which was about to die, and he turned it around and made it extremely successful. And he did it simply by changing the currency of his balance sheet from fiat dollars to Bitcoin. And so that brings us back to this photo. Here we have Ryan Cohen, the CEO of GameStop, a company in its own right that is a protest against the existing financial system, that has a cult-like shareholder base and a struggling business. And he's meeting with Michael Saylor, the CEO of a company that also has a struggling business, but was able to turn it around and explode shareholder value to the upside simply by buying Bitcoin. And that brings us to the ultimate question. Could Ryan Cohen turn GameStop into MicroStrategy 2.0? Or in other words, will GameStop buy Bitcoin and put it on its balance sheet? To a Benjamin Graham type value investor, GameStop as a stock is extremely overpriced, and most value investors don't really give Bitcoin a fighting chance. However, I think that this event is really interesting for a few reasons. I mean, one, as mentioned, both GameStop and Bitcoin are symbols of retail investors being frustrated with the existing financial system. Because of the whole meme stock craze, many GameStop holders think that they were cheated out of much higher gains, and they hold on to GameStop stock purely out of protest. And similarly, many Bitcoiners believe that the existing financial system has many of its problems rooted in central banking and the fact that we use a dollar that can be printed out of thin air. So These two audiences are very, very similar. And if they were to combine in some way, like if GameStop were to buy Bitcoin, it would be very, very interesting as an event to see what would happen if these audiences collided. But more than just the audiences colliding, what I'm even more excited about is the potential for MicroStrategy's strategy, no pun intended, to become more mainstream. Because again, MicroStrategy is looked at as an anomaly, as a company that got extremely lucky and somehow got out of the other side. But many people in the existing financial system think MicroStrategy is going to crash and burn, or are rooting for Michael Saylor to fail, or just generally believe that what he did by buying Bitcoin was a bad financial decision, when the share price of MicroStrategy is saying quite the opposite. So I think if GameStop or any company with somewhat of a mainstream news presence were to buy Bitcoin and put it on its balance sheet, it would draw massive attention to this strategy. It would force a lot of CFOs and financial analysts and teams to reconsider this strategy as not some fluke that Michael Saylor pulled off, but a very real strategy that could transform a business. And again, just a couple more anecdotes to really prove this point. I mean, firstly, Michael Saylor has an entire section of the MicroStrategy website dedicated to helping corporate finance teams adopt Bitcoin and put Bitcoin on its balance sheet. But not many companies have taken him up on that offer. And when you look at the other companies, you see Tesla. Tesla is not really associated with its Bitcoin holdings whatsoever. Elon Musk is off busy doing Doge and also is a fan of Doge, the meme coin, which is not Bitcoin. But then the next most popular company on the list is probably Metaplanet, which is a very niche e-commerce retailer based in Japan that again, was failing, bought Bitcoin, and completely transformed the business. So I think this playbook, it started with MicroStrategy. Some other smaller niche players in the market have started to adopt it. But if another big company like GameStop were to adopt this strategy, it could become big news, and it could become a strategy that many more companies follow. Perhaps Microsoft, which recently had a vote on whether or not they should hold Bitcoin. They voted no, but the fact that it was in their board meeting at all is pretty interesting. Or Apple, which is a company that many people criticize to have stopped innovating ever since Steve Jobs unfortunately passed away, and Apple has a ton of cash on its balance sheet. And when you start looking at these large public companies, you realize a lot of their stock price has to do with how they manage their treasury, how they manage their cash in reserves. What if that cash wasn't dollars? What if that cash was Bitcoin? Anyways, that's some food for thought. I know that was a lot, and I know this video might lean more towards Bitcoiners. But again, I'm not making any predictions, but I do think if it does happen, I hope that this video will become a resource for people to think about the ramifications of what might happen in financial markets. And I'll just come out and say it. If GameStop puts Bitcoin on its balance sheet in 2025, I think it will be looked back at one of the moments that transforms Bitcoin from kind of a niche cryptocurrency on the internet to an actual institutional treasury asset that's being held by many corporations, not just the lucky few like MicroStrategy, and not just some countries like El Salvador, but many large countries and treasuries around the world. And as always, let me know what you think. I'd love to hear from you all in the comments. Let me know if you agree with me, if you disagree with me. I'd love to get a discussion going. And until next time, thank you for watching.